Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, March 31st, 2024, and it's about 10 minutes to 1 p.m. here on the East Coast. Happy Easter to all those that celebrate. And I'm Wayne. Let's get into it. Just finished macro measure. I've got all the Easter family stuff that's starting to impact here. So got to get things taken care of. Here's our trusty disclaimer. Here is our trusted intellectual property rights notice. And here is macro measures summary for the week if you want to take a look at that. A lot's the same, but there are some little differences here and there. I think that's probably going to do it for that. And then we'll just kind of reposition. And let me see if I can stop share and then get us to here. We can start with the sectors on screen 4. Okay, this should get us started, and then we can go from there. Just going to make some basic observations here, right? We had XLE kind of working our way through our grid of 12, where we usually start, right? New high. Like I said, I think we were fortunate to spot that turning, and we've been playing that side of it here and there with some paper that's come in. So that's been good, and we weren't caught off guard by that for the longest time. It was kind of like super frustrating, I guess, for people that wanted to see it do stuff and just kind of left for dead by the market. But it finally started to do its thing a while ago, and the last couple of months have been really good in energy. But as of right now, to me, I think there's nothing really wrong with it. And you got to like, I mean, seriously, you seriously have to like the way that it acted. And I've got to get us on a better time frame here. Let's drop down to a more reasonable time frame. I don't want to have to bring up all this data for 10 years every time. A little bit of a remnant from macro measure when we were looking at, I think, VIX. So let's just go to a 6-month. But I think the little bit of a problem is that it just got a little bit ahead of itself here. So I think on the daily charts, you're looking at near 76 RSI reading. There's nothing really wrong with that. It's just that, right, we all know that that's pretty high. It did get really close to a target, I guess, though, that we laid out a while ago, which is also interesting. So probably you're going to be ready to keep a close eye on this one, given where it's gotten to RSI-wise, the fact that it essentially reached target. And so it could be an interesting area for an interesting time for it at this moment. Now, getting back to the grid of 12, so that's acting really well. This is interesting in that, right, the former leader, remember, the Qs didn't really do much in March. So the former leader, I mean, energy, for example, outperformed dramatically in March versus the Qs. So there's a little bit of the Qs were the leaders, clearly, right? Mainly SMH and semis. We all know that, but this has been sort of left behind at the moment, which is really, though, healthy consolidation. So if there's going to be another leg, right, we know this will probably get involved in 99% of your scenarios you can imagine. It's just not doing it yet, right? So bears watching because, right, this could really, as a leader, if this starts to weaken again, and then it would potentially take out support a little bit lower, maybe like 2% to 2.5% lower, that could open it up to a bigger drop because of the gap. I don't pay attention to gaps. 5 days after there's the gap, it doesn't bother me that there's a gap anymore. At that point, I just kind of ignore it until I see the stock, or in this case, the ETF, starting to round over or set up for some corrective action that might bring it back towards the gap. That's just the way I handle it. XLC, right, another leader. This one did break out where XLK could not, but it's hesitating. There's nothing wrong with that. It kind of has like a flagging situation, which actually looks okay, right? But that's trying again, which is better than XLK. XLF has been a relentless juggernaut. That's overbought at this point. There's just no doubt about that. They even got XLRE to start to come back again after it really pulled this breakout off back in here in mid-Feb, looked really good, then lost support that we drew, has been in trouble now for a week since losing that. But the last couple of sessions, they managed to mark it up. Now, that's where I start to wonder, That's sort of odd to me. But it could be holiday-esque stuff. But if it isn't, right, keep your eye on that sort of intermediate high up here at, let's say, 40. We'll call it 40 and a half. You get through there, you're not, obviously not far from the highest high, and that could really ignite after a consolidation of several months, right after an uptrend that led to that. It could really ignite and go to another leg higher. Same thing for XLV, right? It was going gangbusters for the year. Then it had the last several, pretty much the last several weeks to maybe 6 weeks. It's been more of a consolidation there, but it's getting close to the highs, so it could potentially break out or fail to take out the highs. XLP, you can see that just continued to roar. XLY, which we were wondering, what's going to happen here. This is a little concerning. The staples were moving up. Meanwhile, a couple of weeks ago, earlier in March, the discretionary was moving down, but the gang started fixing that last week. So that's been, I'm sorry, the week prior, and then we held on last week. XTN they finally came for. So I want to chart this one because I want to. It might be worth just suggesting that everyone go take a look at some individual charts in there. I'll bring that up on the larger chart. But look, this juggernaut XLB just keeps going. XLI is another juggernaut, right? These things are reaching highs. And the only thing to me that really, other than it rarely do things look better, right? That's a problem because rarely do things look better. But this is also a little kind of a head scratcher where, yeah, I know that rates are coming down a little bit. In the TNX, we've been charting that, but this kind of perking up, this can often be a defensive situation. So, are people going in there to kind of rotate into some safe stuff now that we've gotten these really stretched valuations? Just a thought, right? Really just a thought. But let's move this out of the way. Almost all sectors, though, are participating to a degree. There's nothing really that's last week that you could say, well, that really went into big time sell mode. I mean, the only thing that even remotely approaches big time sell mode is XLK, and that was very mild. That was really just more of a not interested in participating type of week in XLK. It didn't really turn into anything dramatically bad, right? I mean, that's just consolidation. So right after being the leader for a while and really ripping, it's the last, say, month, it's been sideways-ish. And we'll see, right, if that's sort of portending as a leader, it's portending more. SMH is also a little concerning to me because it's got this triangle and it's really close to important support, which in my mind is probably the 20-day initially. Now, the real crack of that trend, much like the Qs, it probably would take the 50 cracking to really say, okay, this thing's really, really in serious trouble. And we know why, because there's something starting to drive prices down. But really, the initial crack would be somewhere near that 2010 we're at right now. So with these lines converging as they are, and you've got the triangle forming, and you've got sort of negative divergences happening to a degree below in the oscillator indicators, whatever you want to call them, that to me is something that bears watching. So remember, it led the market up, and along with XLK, and this would be a problem if this can't keep, if this can't keep going. So keep your eyes on that one. Let's see. Getting back to XTN though, where I really wanted to go. XTN, this is really after what happened with IWM last week. This is probably the lone holdout for being able to say, well, hey, this is for sort of like the nitpickers. IWM, let's go. We were talking about this. Luckily, we had something in there. I talked about how that we had that idea in there to the upside last week. Talked about that the last weekend's videos, and it did deliver after finding support at a higher level, which is something I always like to see. Just kind of getting another kind of base camp, getting moved higher and higher. I like seeing that, and that's what it did right near the 10, 20, 15, all those SMA confluence zones. That all worked out. So that started to join the party. Are we convinced that it has joined it? I'm not convinced it has yet. It could just be right there, them exceeding the recent high barely on a holiday week at the tail end of the holiday week, faking a breakout yet again. We've seen it many times in IWM, only to sort of reverse. So we're not out of the woods, but it did act fairly well. And that leaves, if it continues to act well, that leaves XTN really as the main holdout of now you've got small caps going, but if the economy really was set to do better, wouldn't transports be doing better? Well, they got a hold of those too, right? You can see that towards the end of the week, that was doing a lot of nothing for several sessions, and then they got a hold of that and marked it up. So it's the highest level it's been, right, since back here, since late last year. So that's close to breaking out, close to. And you've got sort of higher low, higher low, excuse me, higher low. So they're kind of working it up. You could see the SMAs, the longer term ones have flatlined, but a lot of the shorties, even including the 50 and the 100, are already curling up. So it's getting there. And I think if it breaks out from this high, that would obviously be a good sign for many things, but that would probably mean, right, it's on, if in a bull market, it's on its way up, I think 10 points, which is not a big deal. That's my projection, the conservative projection right now. Your big deal, 10 points, but obviously we're not really looking to trade this ETF. We'd rather trade some of the names that are within there, right? Some of your components and so forth in transportation. So I do think if we stay bull market-esque and we continue to run into the second quarter EPS season and they manage to do, I would say this is one that could break out. You should probably investigate that. So this reminds me a lot of like what we said when we were sort of not impressed in energy, the same, not impressed in energy for a while. And then you start to see the sector charts shift more constructively. And again, if you're new to what I do, I like to really look at these to say, it's one thing, right? If one stock rips up for whatever reason, but if an entire sector is really starting to shape up better, to me, that's the macro, that's the institutions probably starting to position themselves to make that happen, right? They're kind of all making that happen in the price action together, right? On balance, all things being equal, all things sorted out. And so that's really them, showing up there. And that slowly but surely, right? We saw that after the longest time of saying energy's pretty much a dud. They finally came in, they put in their, excuse me, higher lows, higher highs. And then there were other technical factors that I think that were shaping up there. Same thing really finally happened in XAU, right? In the precious metals, in the miners. Philly gold silver index in this particular one. So that was a little different in terms of how it unfolded. It was like rip, right? And got overbought, pulled back to the 200 in purple and bounced and went again. So these were fortunate because this stuff was sort of both of those were dead in the water to a certain point until the technicals started getting better. And you even have like positive divergences on this low here versus here. And I think you kind of could see that there was a little bit of an ebbing of the downside momentum. Then they held it there and reversed it, and then they were able to put that together. So it's a tough sector to trade, but I think those early signs start helping you if you keep an eye on these things, week in, week out. But XTN to me is the latest one that's showing those signs. So I think it's worth keeping an eye on if the bullishness continues to permeate the market. What else should we look at? I think really almost everything else we could mention I think some of these are a little overdone. So for example, let's just take a look at some that are clearly overdone on the daily. That would be energy with a 76 RSI reading, XLF with a 72, XLB with a 75, XLI with a 71 rounded. So those are all a little bit toasty at this point. Some of these other ones, not nearly as bad. I think it's good too that if there is bullish extension from here, right, without any real corrective activity, if they manage to pull that off, an area that also would be worth looking at would be XLY, because we do know there's some names in there that can really go at times, and uh, in your discretionary space. And that also is up. It's not overbought, right? At 58 on RSI, not overbought on the daily. Let's bring it up because you can see, right, kind of like a little bit of a rounding sort of cupish handle mini type thing going on. But there's really another one in there that's a little bit larger where you almost have like another cup with a kind of a fancy handle to it, sort of, right? And I'm not a stickler on some of these things. I'm more or less like, does it kind of look like that? And if it does, I have no problem embracing it because it doesn't have to be a perfect pattern to work. I've seen it many, many times. A lot of folks I've read their stuff and they're get really, I guess, stringent for what needs to happen in terms of what to consider this or that. But I feel like the same kind of investor behavior is in place, which to me is, I think, ultimately the more important factor. Is not that it really meets sort of like prescribed rules or identification patterns perfectly. It's more that you have a similar investor mindset where they just kind of they're aggressively coming for this thing and they're really close to a breakout point. And so I would look at that because this thing's really been, if you want to make an argument, you could say it's been consolidating now for 9 months. It hasn't really advanced dramatically in 9 months. And we all know really in the last 5 months what the market itself has been able to do. So that to me is a pretty big deal. And you could get good performance if they break this out in a market that if that market keeps going. I mean, that's the in the bullish going forward near term bullish scenario. Let's look at GLD, SLV to go along with XAU. Go back to those. You can see how they've gotten right there. That's really where's my other stuff? I'm trying to be able to flash. That's a little bit overdone in the short run and getting up there on bigger time frames already. But that's been a real change. Obviously, we did have some ideas related to GLD, maybe GDX. We had SLV as well. This has been a little bit of a laggard. That's not uncommon. So that could, I mean, I think really that's a good looking chart because you go up, they do the initial breakthrough, these highs. New high buyers are like, okay, we're breaking out. They rug pull them, bring it down to the rising 20 in blue, hold very well there now for 3 sessions. You held on to most of your gains right on this really strong push. So you held on to most of your gains here. Now you're at a higher low that you can maybe try to push from. And if they do, that'll be the break. That to me is a much better chance of breaking out, starting your run from here and going and breaking out rather than starting all the way down here with this higher low versus here, then running all the way up to the breakout level almost relentlessly and then failing ultimately to break out for real. So this is, if it does work its way back up from here, I think it's got a much better chance of breaking out. GDXJ, let's see how some of these junior miners are doing. And they are doing pretty well as well. You are getting near overbought on the daily and you haven't taken out the highs. So, but they are responding because a lot of people like to ask us to look at that. So there's that space. Let's take a look at the oil future because we do a little bit of a look at basic futures here on the Thinkorswim platform. Come on, taking a little bit of time. Starting to get there a little bit on overbought, but not really in a big way yet, right? So just been a really nice trend. I think you can see, right, that looks really good. I mean, that does look like it's got the potential to me to keep going right now. And I don't think it's anywhere close to being overbought on the weekly or monthly. So there's plenty of room there if it wants to go. And it had a nice pop. We can try to highlight that a little bit more. Nice pop, pulled back to SMA support. You put in over a week of consolidation of this nice pop that it had, and now it looks primed to want to go again. So I think that is on the cusp, right? You can see that is really on the cusp of breaking out and then maybe starting to trade up to the next level. And I think that would probably put it at 12 point. Well, I was going to try to extrapolate that, but it's just not worth it. let's see, that would put us up to in here, ballparking it about 85. So another 2 point something percent, which we're not trading this obviously, but I'm just saying like that there should be a little more before you even hit anything. There should be about 2.5% if it does break out through that high. And that I would translate that over to some individual names. I mean, obviously we're not really interested. Well, some people might be interested in trading the futures, but I like to go find a stock that I think is most prime because that's where I'm the most comfortable. Um, XOM, by the way, already at a 77 RSI reading and hasn't taken out the high, and it's been relentless, right? So if it got up there with again without really material news hitting, if it manages to get up there, the first time it gets there, it could be very tired if it keeps going in the near term. Very high RSI readings, unlikely to just break out, so resistance would hold the first time around. We do have some names in here though. I haven't gotten this big energy burst so we've seen it other times, but I think we had CVX. I think it might still be good. I know we had Baker, we had Hal, we had some other things. Can't remember them all, but this has just been a really good combination of, I think, good charts shaping up, good UOA in a bull market, catch up mode. It's all kind of worked out in there. So I think overall, to me, that looks primed to possibly deliver even more. So another area I think that's worth keeping your eyes on. Not a breakout in so much the way XTN is, but still a breakout potential of some of those names there. Let's look at copper too. Copper, I think it popped much like oil, much like the metals popped. Then it's gone back into this pullback mode, but it too is really doing a good job of, I think, finding support near former highs or stopping points. And so it's done that nice breakout above a key resistance, let's say level, and then come back to it and hold so far. So again, if it holds and continues to go, there's maybe a whole nother leg that could develop there. And we're not trading the copper future more than likely, but I'm just looking at that in the sense that that's really good overall, right? If you see these things bid, these commodities and materials and so on and so forth bid, maybe these bulls are right to be as front runner-ish as they are right now. We have looked at times at XHB, IYR, and some of the lumber, timber ETFs. This one, right, a juggernaut just keeps going. Another one that proves to me personally why you just keep relying on the chart and the trend and trading that trend, because this is completely at odds. I say it every week, completely at odds with what I think house home building is set up for, and even some of the reports we saw that I covered in Macro Measure. We have more of a U.S. real estate ETF here in IYR. Just had a little bearish idea in there recently, mini pullback, and again, much like counter trend trading, you see the rising 100 there that's dashed. So the 100-day is telling you that you're in an uptrend still based on the last month and a half worth of action. And that started to improve. And as a result, you got the little dip, but if you didn't take some money or your money, all the money, right away, you're right back to being in trouble, right? This is why the counter trend trading in a nutshell is tough to do. We've been looking at wood and cut related to these, and usually these are pretty much close to what's happening in XHB. You can see XHB powered, the wood ETF that powered. Let's see if cut powered along with it, and it did, right? So you can see these things are pretty much lockstep, right? So that all kind of makes sense, but those are obviously been a really supporting it. We have seen slight divergences, at times, but not very often. I'm trying to think if there's anything else that we could look at that would maybe be helpful, but I don't think I can come up with anything that we haven't really covered consistently. We did look at SMH, which probably bears watching. Probably the one thing that I should do here just to wrap up in sector situation is to show you there's a triangle at SMH, which to me, you got to be on guard now because that could go either way. So if you're thinking, okay, this is doomed, you might be right. But remember, if they reverse it up through the high from not last week, but the prior week, they might go back into attacking the highest high mode. And if you're a bear, you could be in trouble. But there are a little bit of concerning, I think, snapshots in time at the moment. So I'm going to close out sector situation with a macro measure chart just because I think it's an important time for that right now. Oops, I always do it. I've got this problem like this. Something always makes me skip over Google, and I don't know what it is. I do know that I really don't care for the company, but in terms of their Orwellian stuff, but I could say that about a lot of these companies. Where am I? Oh, Tesla. Somehow it's still clinging in there, and then we have the Nvidia, the juggernaut of juggernauts of these of this market. But this is where it's a little more concerning too, with SMH, with the this is really your leader. You can see, right, you kind of have a double top situation here versus here, and you've got worsening readings on your indicator oscillators, whatever you want to call them. Say it every time. But that to me, again, a little bit of a source for concern. This would crack its trend if it took out last week's low. And then you'd be, visiting probably these lows back in here, the support back in here. So that's a decent little fall and could weigh on the market as given, right, the place that these occupy, given how heavy they are in terms of weight. So SMH looking triangular, right? You've got the big dogs, the Mag 7 looking a little concerning with some negative divergence. And then you've also got the Qs really not, which were the leader, in terms of the big four, along with the spiders, but the Qs being so important, those are not far away from cracking their 20-day again. Now, as long as we're above all this and they keep things above that 20-day, which is rising right now, I think you're okay. But you're not too far from it. I think you have to be concerned for that reason. Because if there were going to be corrective action, and I'm a member of the gang, my vote would be to have it really in the first couple of weeks and then use of April, second quarter. And then I would use those earnings that start coming out halfway through in the financials to start my squeeze back towards the highs. And then hopefully your big tech comes in not too far after that and everything's wonderful again, right? And you can do even more squeezing and you got that sort of overdue correction out of the way. But the bulls don't really listen to me in terms of their in terms of how they're going to logistically arrange for everything. But that's how I would do it, just because we've been going up without a break for too long historically. The calendar calls for something to happen now in terms of the presidential election cycle. And I could add 3, 4, 5 other reasons why, but it's not worth it. This is a macro measure. But that's the point, is that now's a good time. I doubt they'll listen to me, but every now and then I do seem to put a good little guess together, and then things do work out generally in that way. But that would be the smart play. That would open them up to be able to probably get the market back on its horse, and then even rally into the end of Q2 and then celebrate those earnings like they did last year. So probably like a lot like 2023 would be 2024. However, right, that's really all I've got on the sector side. We really can't, much like what I said about sentiment when it comes to nitpicking at this market. And I can't really nitpick, right? I can't say, well, this is terrible. There's this massive divergence. All I can say right now is that rarely do things look much better than they do right now, like sector wise, sentiment wise, right? But the only real things are what we just covered there, macro wise, with SMH, QQQ, XLK, those being former leaders, maybe not looking great at the moment, maybe looking vulnerable. That's the only thing. But otherwise, if you just took a snapshot of all the sectors, you can't really follow XLK and things like that too much, because they did so well while other sectors were not performing, and then other sectors finally started catching up. So they're ahead, and they're having their break or pause sooner rather than later, and they usually resolve that sooner rather than later. And then that could either continue to lead us on another leg higher, or we get more real corrective activity from them, and that eventually weighs on the market. So I think on that note, I'm going to end things here. I'm going to thank everyone for tuning in as usual. I hope what I've shared in the weekend videos this week helps you in this upcoming start to Q2. I hope everyone has a wonderful weekend. I hope everyone that celebrates Easter has a wonderful Easter holiday. And we'll be back in touch at some point during the week, and cocktail hour and weekend videos all over again next week. Thanks for tuning in.